Introduction for company. Berjaya Corporation Berhad is one of the biggest company in Malaysia that have a wide area of business, is a public limited liability company and listed on the main market of Bursa Malaysia. For Paksan Holding Berhad is a retail company based in Malaysia that operate department store and shopping mall in several countries. It's listed on the Bursa Malaysia Security Berhad. They aim to provide quality product and service to its customer while creating value for its shareholder. Both of company use MFRS and IFRS, and the requirement of the Companies Act 2016 in Malaysia have been complied in their financial report. MFRS 116, which is property, plant and equipment. Berjaya Corporation Berhad MFRS record at cost and subsequent are included in asset carrying amount. Other than that, subsequent to recognition PPE are required to be replaced in interval. Meanwhile, for Paksan Holding Berhad is take at cost and impairment cost, and subsequent recognition PPE are required to be replaced in interval separately based on their specific useful life. Lastly, repair and maintenance costs are recognized in profit and loss as incurred.
In MFRS 116 for Berjaya Corporation Holding, measure financial liabilities in two categories, which is measured at amortized cost and fair value through profit or loss. For presentation and disclosure, the depreciation for property, plant and equipment use straight line method. The useful life and depreciation method reviewed at each financial year end. Gain or loss of asset include in profit or loss in year of asset be recognized. Next, for MFRS 116 for Paksan Holding Berhad, measure financial asset in three categories, which is measured at amortized cost, fair value through profit or loss, and fair value through comprehensive income. For presentation and disclosure, the depreciation for property, plant and equipment use straight line method, and the useful life and the depreciation method reviewed at each financial year end. Gain or loss of asset include in profit or loss in year of asset be recognized.
Berjaya recognized 100 million ringgit Malaysia impairment loss on one of its office buildings during the year. Certain additional properties became eligible for classification as IP, while certain properties were reclassified as PPE.
Next, for the question of measurement. For the measurement of Berjaya, carrying amounts of the investment properties determined based on valuation by independent valuers. Certain properties classified as property, plant and equipment reclassified and as investment properties because not occupied by subsidiary companies have been pledged to various financial institutions for credit facilities, utilizing its investment properties as collateral. Next, for the question of presentation and disclosure for Berjaya Corporation Berhad, firstly, the carrying amount of investment properties was disclosed a total of 276 million and 375,000 ringgit for the current year. Next, for the independent valuation, the carrying amount of the investment properties were determined based on valuations conducted by independent valuers. Then, for the fair value hierarchy disclosure, the fair value hierarchy for investment properties is disclosed. The reclassification of properties, the company has reclassified certain properties based on their usage by subsidiary companies. Next, for the pledged investment properties, the company has pledged investment properties totaling 625 million and 108,000 ringgit to various financial institutions as collateral for credit facilities. In conclusion, Berjaya Corporation Berhad appears to comply with the disclosure requirements of MFRS 140 for the presentation and disclosure of investment properties.
Paksan recorded 2 billion ringgit in investment property in its financial accounts ended on December 31st, 2022. And Paksan also recognized an 50 million ringgit impairment loss on one of its shopping centres during the year.
The measurement of Paksan Holding Berhad measures completed investment properties using the fair value used to assess the completed investment properties made up of commercial structures, determined in accordance with the market values of the assets in the current uses, taking into consideration any current uses, tenancies. Level 3 of the fair value hierarchy applies. For Paksan Berhad, firstly, the fair values of the completed investment properties categorized as level 3 under the fair value hierarchy. Next, the net carrying amount of IPOC reclassified as non-current assets classified as held for sale as of 31 December 2022. Then, has no restrictions on realizability of its investment properties and no contractual obligations related to investment properties. Then, the net carrying amount of investment properties disclosed amount 449,989,000 ringgit as of 31 December 2022 and RM 476,021,000 ringgit in 2021 is pledged for loan facilities. Lastly, Parkson Holding Berhad has presented and disclosed its investment properties in compliance with the requirements of MFRS 140.
The difference between MFRS and MPERS is based on definition, prescribed similar measurement requirement on the consideration transfer, while MPERS specific the cost element, the form the cost of business combination. For initial measurement, MFRS shall be measured at its cost, which take the price of exchange transaction into accounts, while MPERS the initial measurement should be made at cost of initial recognition and should take transaction cost into account. For subsequent measurement either using cost model or fair value model. For MPERS, measured using is at cost or revalued amount less accumulated depreciation and accumulated impairment loss. However, for investment property, MFRS allows accounting policy choice of either fair value through profit or loss or impairment model. For MPERS, an entity must use the fair value model. For disclosure for the first time absorption, lastly, MFRS, when accurate cost information on the asset and liabilities is not available, a first-time adopter may choose to measure the investment property as its fair value and use that value as the deemed cost. For MPERS and investment properties prior GAAP, revaluation at or before the date of the switch to MFRS may be used by the first-time adopter as the investment property considered cost at the time of the revaluation.
Last but not least, MFRS 116 and 140 are two Malaysian financial reporting standards that govern the accounting for PPE and investment property respectively. Berjaya and Parkson have applied MFRS 116 and MFRS 140 in line with the requirements of the standards. Berjaya has a higher percentage of investment properties in its total assets than Parkson. Parkson has fewer impairment loss on its investment properties than Berjaya. This variation could be brought on by things like the nature of the enterprise.